Focus to one stock which has got a buy rating after an initiation by CLSA. They initiated coverage on Kansai Nerolac, and the brokerage expects potential market share gains in the decorative paints segment to be the key driver for the stock. They forecast EPS growth of 17% between FY18 and 20. HM Bharuka, the Vice Chairman and Managing Director of Kansai Nerolac, and quite clearly one of the best voices in this paint industry, is joining us. Mr. Bharuka, good morning. Thank you very much for joining us. Appreciate the effort you're taking. First up, the GST disturbance, Mr. Bharuka, is that more or less over? Now are all your input guys in the chain and smooth?
Good morning, Lata. Yes, I think GST, I think it is an administrative problem as of now rather than any worry as such. I think the paint industry did not suffer much with the GST implementation. It is dealer network which is definitely having some administrative problem. And we are facing some teething trouble as far as systems are concerned, which I think everyone is aware of, and I think government is trying its best to sort it out, trying to postpone it, trying to reduce number of filing of the returns from monthly to quarterly, and we hope in next 2-3 months it will be stabilized, but it is not disturbing the business.
No liquidity problems?
No liquidity problems. Okay. No, not at all.
Okay, and finally on GST, the other question really was that you all were not included in that 28% cut to 18%, which advantaged many people. It does, from what we could gather from political leaders, cement and paints are still big revenue generators, so they have not included it right just now. Will it make a big difference if it was 18?
I'm happy that government is saying because it is a big revenue generator. I hope we are not classified as a demerit or the sin product, because we do make the mood quite better when you are depressed actually with the beauty, and as well as we protect the assets of the country. So I hope sooner or later though it has not been done, I am sure it will be done, and in the maybe next cycle. They will reduce for the paint and cement, because both are very, very important for the government thrust on low housing and the infrastructure. So I'm sure it will happen. And certainly it is very important, to reduce because paint prices have gone up. They are linked to the crude, so crude is going up, so they have gone up. So it will add more money to the pocket, and we hope that painting cycle is reduced because of that.
I was just coming to that, sir. The fact that crude prices have gone up. I think the last time we spoke, you did mention that it wasn't a concern back then. That's I think a good month and a half back. What about now? Looking at the current prices, what is the kind of input cost inflation that you are anticipating, if at all?
If I remember, what I mentioned was, I'm not expecting crude prices to jump significantly, given the demand and supply situation. The only problem is geopolitical situation and the production cuts which are being, taken by the oil-producing countries. So, but this is temporarily. I think, the shale gas production which is coming from US is going to balance it out. Personally, I felt actually it should have never gone beyond 60, but now 70 is the upper limit which is being talked about. So it's slightly a concern area, but more than that, I think we are concerned about the China's environmental issue, which is affecting a lot of companies or the industries over there, and which is disrupting the supplies and the prices of TiO2 and other items. So I think definitely the input cost for the paint industry, not only because of the crude oil, but because of the disruption from the China, some of the anti-dumping duty which I think government has imposed. I think these are the worrying situation, and we will have to perhaps go for a price increase. We are already all asking all our industrial customer for price increase. In decorative, we had increased the prices in the month of April, and I'm sure if it continues, we will have to increase the prices.
As of now, sir, what's the kind of price increase you think you will need to take on both the segments, if you could tell us, on the decorative side and the industrial paint side?
I think it will be ranging from 2 to 3% for decorative. Industrial could be slightly higher because industrial is case to case and customer to customer, segment by segment, so it will differ from depending on the product mix, it will differ for every customer.
Okay, so therefore margins, Mr. Bharuka, your gross margins slipped a bit, but can you maintain it at 40%?
If I have to retain my job, I need to do that. So how I do it, I have no idea. But certainly this is under pressure. We will have to do a lot of value engineering, cost reduction, and we'll have to request our customer also for price increase. And I'm sure they will support us because they also want us to grow. So I think it's a challenge, but that is where our skill lies.
Okay. What do you mean by losing your job, Mr. Bharuka? You're the only non-Japanese in the Kansai board, aren't you? I mean, let me just come to the...
So maybe I will lose a job in India.
No, they'll give you larger responsibility, if anything. I wanted to come back to the purpose for which we thought of Kansai Nerolac. One brokerage saying that you are likely to notch up higher market gains in the decorative space. Do you see early trends of you getting a higher market share in decorative?
Difficult question for me to answer. I would leave this,
okay,
to the research team of the brokerage actually to decide. But certainly, I think we have been doing well last 2-3 years, and as everyone aware, industrial is always under focus, so we need to put a lot of focus on the decorative, and fortunately we increased our advertisement expenses in last 3 years, and a lot of new products, a lot of new initiatives, and fortunately I think it is paying the result, and we hope this momentum is continued, and team is bullish about it, and we hope to deliver better than what we are doing.
Mr. Bharuka, I think you're at 12% market share on the decorative side now. What sort of volume growth are you anticipating for the second half in decorative? And is there a sort of a benchmark target market share you have in mind where you would like to be?
I think you rightly said we have a very low market share, so there is no point in right now giving any target of market share. And fortunately for industry has been doing well, and we expect to have a double-digit growth. And if you are able to do better than that, what industry is doing, I think for us that would be a solace.
What kind of volumes, I mean, is the pie growing, the paint industry? Do you see that kind of a growth troughing out and the pie itself growing?
I think, the government statement is a clear indication that getting a lot of revenues from the paint industry. So obviously pie is growing, and last, 25 years it is having a double-digit growth, I think, and I have been always making this statement, next 25 years it will have a double-digit growth. Okay. So certainly pie is growing, and it's one of the best defensive industry as of now in India, better than FMCG. So I think we are in a sweet spot, I would say.
Also marquee companies, marquee entrepreneurs, you will have to say, in this industry. But you'll have been running, your run rate has been, in terms of volume growth, has been increasing. Will this third quarter be something like a 20% volume growth?
The second quarter was better partially because, Diwali was early.
Yeah.
And maybe some destocking which had taken place in the month of July because of GST, okay, that resulted in a better growth. October was not as good as we had predicted. But I'm sure November and December would be far better. So all 3 months put together, we should have a double-digit growth according to me.
Okay, so last question then. Your capacities. What sort of utilization rates are you running at? I think you were adding some new capacity. Has all that come on stream? And if you could just give us the utilization levels then.
Actually, our capacity utilization has already reached 90%, and we are running short of the capacities. And we are putting up 3 new plants every year. One plant would come up. I think one plant would start by month of January, and we would be increasing our capacity close to 50% in next 3 years. So we would take care of the capacities. I mean, as I said, we did better than what we had expected actually, and that resulted in overutilization.
Okay, that's very good to hear, sir. Not too many industries tell us that they are increasing capacity because of demand. It was a pleasure speaking with you, Mr. Bharuka. Thank you for spending time for us. Okay, so we've had actually 2 industries today, 2 companies today telling us that they're actually putting up more capacity because they see more demand. Forging said that, and now it's paint industry as well. Firing on many cylinders. At the moment, Bajaj Finance has taken the lead. So, this is the set of stocks, NBFCs, which were the leaders of this rally. So they're coming back to assume leadership. IndusInd Bank is giving it company. And now the techs have also joined Infosys and Tech Mahindra. So it's firing on several cylinders, you will have to say. Bajaj Auto is not far behind at all. So let's listen into this very interesting chat that Uday Mukherjee is having. Moody's has upgraded their rating on India last week. All eyes are now on S&P report expected soon. How will all this change the global eye on India? Uday Mukherjee caught up with Rana Gupta, Managing Director, Indian Equities of Manulife Asset Management. Began by asking him about the Indian market, his thoughts on fresh buying overtaking profits. Listen.
Valuations in our view is not that expensive. It's definitely not cheap, but it's not expensive either. Particularly considering that earning growth has come back this quarter. In our calculations, operating profit grew over 15%. We expect that trend to strengthen going forward. So our view is that with this kind of earning recovery coming, valuation is reasonable, and the case for fresh buying still exists, particularly in sectors that we mentioned. In terms of taking profits, we would rather avoid stocks where the valuation is expensive and the earning recovery is not there, which would typically be sectors like consumer staples, some consumer staples names, and the healthcare names. So it makes sense to take profit there. Some of the consumer staples particularly done quite well, and add to the sectors where we are bullish earning recoveries, add to those names.
You're not convinced that consumer staples will see decent volume growth going forward, because a couple of these companies seem to show some signs of some rekindling of volume growth in the current quarter, but you're saying the valuations are too expensive?
So consumer staples, so we are quite bullish on the entire, we are looking at a cyclical pickup of the economy as well, right? So even consumer staples will do well from where they are. But let's put that into context. Let's say they grow their volumes by 7, 8, 9% with some pricing 10, 12%. But because the input price is going up, there's possibility of margin flattening out or even coming off. So they grow the earning 13, 14, 15%. Now for that, would you pay 35, 40 times multiple? We think there are better opportunities. There the stocks will outperform to a greater extent.
You'd be more optimistic or constructive on, say, autos compared to consumer of FMCG?
One would be, but again, auto, we are definitely constructive, but the problem with the auto is, particularly the four-wheelers, there are not enough stocks listed in the market. There are only one or maybe 1.5 stocks listed in the market. So how do you play it? Although we're bullish on the theme, but place to play that in the markets are limited.
Let me go back to financials, because I just remembered last time when we spoke, you did speak about financialization of savings as an important theme.
Sure.
That's played out very well. I mean, from brokers, you've had some new insurance companies listing. What are your thoughts on some of the valuations that you find today, starting with insurance, where you have a few stocks to choose from?
Sure. So if you go back to, I think we met in March or April, and till now, that theme has played out, but we do think that life insurance stocks are perhaps there or lower, right? So we remain bullish on that theme, and because insurance stocks went up and they came back down because of supply issues, we remain bullish on that sector, life insurance sector. Turning to brokers, we do think that theme has now played out, because those stocks have rallied a lot from there, significantly from there. And although the markets will do well, as many of you would be aware that these brokers also get a lot of, a lot of value from the lending operations. And that lending operations could be under some sort of pressure because they are wholesale funded. So that's one of the reasons why we would now take profit on those broking names. Insurance, life insurance, still bullish.
We haven't spoken about IT so can you take a contrarian call and buy IT stocks now, or the case is not compelling enough yet?
So IT stocks have been lackluster for a very long time. But can we at this stage make a case for further deceleration in IT top line and bottom line margins? We cannot. So IT is one sector where, in terms of fundamentals, the bottoming out process has started. And we do see that there is support from the buyback and dividend and so on and so forth. So while we cannot, at this point, we cannot make a significant upside case for IT, At the same time, we cannot make a significant downside case for IT either.
But it's still a value call, not a growth call.
Correct. Yes, absolutely. Coming to that. Now, when IT is providing you good dividends and cash, and the valuation support, again, for a value-based investor, it should look quite interesting. As far as, let's say, we are concerned, IT is a very large weight in the index. And when they reach some sort of that kind of valuation support, one have to look at it and perhaps think of reducing underweight, not go bullish overweight, but think of reducing underweight to some extent. Because IT stocks are truly now looking like reaching a bottom and making a comeback. So to that extent, if you were to compare IT and pharma is perhaps at a much earlier stage of bottoming out. IT is perhaps coming out of it.